Alright, hello everyone. So, this is a quick, I'm going back and editing the content right now. Just for some context, the first 21 minutes of the video are actually going to be based on the lesson. After that, so if you see price, or if you see the video end up being like 30-40 minutes, the last 10 to 20 minutes are just going back and showing live examples, not so much the lesson. Obviously, you'll only learn more from watching the entire video, but really the lesson's only the first 20-21 minutes. Alright, hello everyone. Here is our fourth lesson regarding the 30-minute power 3, the 9:30 to 10 o'clock 30-minute power 3. This power 3 is a entry model based lesson. This model is going to be wrapped around liquidity, meaning we are looking to enter long at old lows, looking to buy the stops, and entering short at old highs and sell the limits. We are entering within the manipulation phase of our 30-minute power 3. This 30-minute power 3 from 9:30 to 10 o'clock is a turtle soup entry model. With this entry model, as all entry models go, we have a checklist. As far as this entry model goes, the checklist is 1. There's a specific window in which we're looking for an entry. That is going to be our 9:20 to 9:40 macro. Oftentimes, our precise entry is going to be between 9:30 and 9:35. Often, it's the very first candle or two that provides our entry. But our time is going to be to look for an entry is from 9:20 to 9:40. The liquidity we're looking to enter off of, often but not always, is going to be the 9 a.m. higher low, the current 9 a.m. higher low, aka the accumulation higher low. What does the higher time frame need to look like? The higher time frame needs to support the idea for the trade. I'm not talking about higher time frame structure, as in, is the daily time frame bullish or bearish? Is a 4-hour time frame bullish or bearish? That is not what I'm talking about. I'm talking about, first, we analyze the higher time frame. Where is price more than likely to head to right at market open? What is our drawn liquidity? Is the 9:30 move going to be a Judas swing, or is it going to start the daily distribution? For those who study my alerts, for those who study what I post out, you will understand which is which. And this is all dependent on news and what we've seen already within the daily power 3, the Asian London session. Back to the time, the macro, our entry, as I already said, needs to be within that macro. If we miss that macro, if we miss our entry within the macro, or just does not present itself, then we will wait for the next bit, the 10 a.m. 4-hour power 3, which, if you have not watched already, that is what I teach in the very first video I've posted. So, in order to understand the turtle soup, the first bit comes from understanding the power 3. The power 3. It is a ICT concept that breaks down the range of a candle. It is not the same as AMD. While this lesson heavily relies on AMD, the difference between AMD and power 3 is going to be a lesson for a future date. Just an FYI. The power 3 gives us a model and framework to hunt setups. Generally, we are buying below the opening price in a bullish market, in a bullish drawn liquidity, in a higher drawn liquidity, and we're going to sell above opening price in a bearish market when our drawn liquidity is lower. We need to understand open high low close and open low high close. Little typo, I'll fix that. As I taught in previous lessons, you know what we generally want to see on a larger scale, such as the 4-hour, daily, and weekly power 3. But when it comes down to our 30-minute power 3, our trades that we take are going to be on a much smaller scale. So when it comes for our weekly, daily, 4-hour power 3, we're moving hundreds of points, more than hundreds of points. The entries we're going to take in those power 3s are going to be much larger than the ones in a 30-minute power 3. This is more of a scalping entry model. Well, not always. Often our first TP is going to be the first opposing liquidity, and then we're targeting external, our ultimate draw liquidity, as you'll see lower. So essentially, we are entering, so in an open high-low close, we're entering in the high, in the manipulation of it. In an open low-high close, we're entering within the low. So we're anticipating where the low is going to be. So I have a few examples here. These examples are more of our classic AMD pattern. I'm going to quickly, just make sure you understand that not every single 30-minute power 3 and that market open is going to be a classic AMD pattern. It's often going to be our highest probability ones, but it's not always going to be that perfect AMD pattern. So this is where data collection comes in, and I'm going to cover that later in the video. So first example we have here, I have all this marked, but we see 9 a.m. opens, price accumulates, we dip down. If we mark out 920 here to 940 here, price dips down beneath the accumulation low, forms SMT at the daily open. This is a bit of an old chart. There's more than likely SMT at these lows. That's what we would want to see. Entry would have been the turtle soup here, entering beneath these old lows. And we can see this is a very quick entry model. Often it's going to be the very first candle of our 30-minute power 3 and right at 9:30. You can see price expanded higher. Following that, we distributed higher. When I say that this is more of a scalping entry model, not every single turtle soup is going to expand 100 points. In this entry model, we are often looking to, as I said earlier, take an early take profit, not all of our position, but take an early take profit at our accumulation highs, and leave a runner for our ultimate drawn liquidity for here. I marked out opposing liquidity on our higher time frame. Trade 2. I have all this marked, but we look down here, 9 o'clock opening, price accumulates, we're right at 9:30, we manipulate up, form SMT at the previous 1 hour highs / the 9 o'clock high, manipulate, immediately distribute lower, take out opposing liquidity. We could have looked to trim at the accumulation lows, we left a runner for the opposing liquidity, our drawn liquidity. Trade 3. This one I'm going to show a video recording that I took taking this trade. It's just a quick 1-minute video, but as of the last month and 1 to 2 months, I've been trying to collect a lot more data on this entry model. As for those who know my second TikTok account, ICT Disciple, I post a lot of trades like this, the 9:30 to 10 o'clock 30-minute power 3. That is the common entry model I take for when I post videos on there. So here we see price 9 o'clock accumulates, 9:30 manipulates higher, forms SMT, displaces lower. For here, my drawn liquidity was OTE, as at the time, higher time frame structure was bullish, but again, this is where it comes to our short-term drawn liquidity, as it's a 30-minute power 3, so it's a much to this. This is a trade recording of this trade example 3. So I am selling the limits. I'm selling above old highs. SMT is my confirmation. essentially sold out my contract a little earlier there. But yeah, that's essentially how it goes. So, a little reminder. We are selling these stops. We are buying, my bad, we are selling the limits. We are buying the stops. For those who study my charts, you'll see that at the top of all my charts, almost all of them. Sometimes I have the indicator off, but that's what it means. So as I talked about earlier, some of these examples show price accumulate prior to market open. 930 hits, we manipulate, running either the higher low of the accumulation, form an SMT, and quickly following that, we distribute in the opposite direction. Now, I need to really preface this and really be specific when I say this. It's a very, very powerful entry model once it's mastered. You can see in a lot of these examples, price will move very, very fast. Not all the time, but many times price will move 70 to 100 points within that 30-minute window. Not always, but very often. And while price can make you a ton of money off this, it can also take a lot of money from you. So if you're not following your rules, you're not setting your stop loss, you will blow your accounts trying to trade this pattern without having months of data collected on it. So you cannot go into the market after this video on your XFAs, on your live accounts, copy trading, whatever, and going max leverage on these plays. No, you cannot be doing that. First month of trading this entry model, you need to be on demo, collecting data, adding that to your journal. And even when you do move to a live, you're not going to start with 5 minis. You're going to start small. You're going to start with 5 micros. You're going to start with 1 mini. Less than even. Because this entry model, it moves fast and it will deliver a lot of profit. And now on to the next topic, SMT. As seen in all 3 of these examples, what do they all have in common? SMT. At the end of all of our manipulation phase, we are going to form SMT. That is a confirmation for the end of the manipulation. So, in a bearish scenario, we are entering off of a old high. In a bullish scenario, we're entering off of old low. In order to anticipate where the end of the manipulation is going to be, we're going to need to see SMT at the old high or old low. So as seen here, in the earlier example, we have our accumulation. Once our 930 opening hits in our manipulation, we're going to form SMT at the accumulation high. And now on to the next topic, SMT. As seen in all 3 of these examples, what do they all have in common? SMT. At the end of all of our manipulation phase, we are going to form SMT. That is a confirmation for the end of the manipulation. So, in a bearish scenario, we are entering off of a old high. In a bullish scenario, we're entering off of old low. In order to anticipate where the end of the manipulation is going to be, we're going to need to see SMT at the old high or old low. So as seen here, in the earlier example, we have our accumulation. Once our 930 opening hits in our manipulation, we're going to form SMT at the accumulation high. If we have SMT at the accumulation high, we have no SMT at the accumulation low, that's your confirmation, the short. And now on to the next part. We do not always need to enter off of NQ. It is just my preferred option. But do not forget that NQ does not need to be the indice that takes the higher low. Many times, especially in the last 2 weeks, I have missed my entry because I was too focused on NQ being the indice to turtle soup the higher low, causing me to miss multiple entries on multiple days. And the example I'm going to show will kind of explain that, what and how you're going to take a trade when you see that, when you see NQ be the one that does not take the low. So in this example, if you see another indice such as ES or YM take the higher low while NQ does not, you can enter on NQ as soon as the other indice takes the higher low and forms SMT. And you'll often see on Twitter, on wherever, these people with super high risk rewards with super tight stops, they're doing something like this, where they're entering on the indice does not take the low, that does not take the low, while the other indice, in this example YM, does take the low. We can have a very high risk reward with a very tight stop loss simply by entering off of NQ and having a stop loss at the low with SMT. Because if that's a true reversal, if that's truly the end of the manipulation, then this SMT is going to hold. And so let's look a little bit deeper at this example. Why are we not taking shorts once NQ sweeps this accumulation high? Back to what we just talked about, SMT. And even before that, we have to figure out what our likely drawn liquidity is going to be, whether it's higher or lower. And this example, it's higher. Second, there's no SMT at the accumulation high. Right at 930, all indices right here, right here, and right here, all indices run this high. What we don't do on all the indices is run this low. Only YM does that, forming SMT at the low. And that's why we are not shorting at the high. So this is why SMT is so important. And now for some higher time frame perspective on this trade right here. This is what the higher time frame looked like. As you can see, I have 930 marked on all the indices prior to that. So when I'm talking about higher time frame perspective in the beginning of the video, I'm referencing this. So back here, whether we have to pay attention to what price is done during Asian London session. So here we see Asian accumulation. So market opens, Asian accumulation, London high impact news manipulation. We form SMT at the previous day low. And this is prior to New York open. So immediately we should be bullish. Going into market open, we want to see price form a 15-minute 2022 buy model for our 4-hour 10 a.m. power 3. So how you guys ask how I'm able to anticipate these 15-minute entry models to form? It's because of this. It's because I pay attention to what price has already done prior to market open. And that's how we can catch these turtle soups. And yeah, that's what I just said. And with this, while I said majority of the time we are looking to enter off of a turtle soup, there are many times where we can get another entry model, such as the 2022 or inversion. And so, like I was showing earlier in my journal, I'll show some more. So this example is the same 30-minute power 3. However, instead of entering off of the turtle soup, I waited for some more structure to develop, still entering within that 920 to 940 macro, but this time entering off of the 2022 sell model. So if we look here, prior to entering off this 2022 sell model, we saw price 9 o'clock opening, accumulate, 9:30 opening, actually prior to 9:30, and actually right at 9:20, we manipulate. I don't have it marked in this video, but I would only assume we formed SMT. I'm gonna actually mark it, I'll mark it after, but we formed SMT at that high. Alright, so as I explained in the beginning of the video, the first 20-21 minutes are going to be the lesson. Now we are complete with that. You can continue to watch the video if you want. The next 10-20 minutes are going to be reviewing this week's price action and finding trade setups using the 30-minute Power 3. Explaining which trades this week would have won, and for context, we'll be in the replay mode. We'll go through, explain any wins, any losses, and any days where this setup was not valid. If you want to find more examples, go ahead in the links in my description. You'll find my Instagram, my Twitter, my TikTok. I post all my trades, the majority of my trades in there, so go have fun. Back testing session. So we see, if we look here, so if we zoom out a bit, this is going to be one of the examples I showed. Not all these trades are going to be from the examples, but here, like I said, previous day left a unbalanced range, meaning EQ is going to be our clear John liquidity, Asian accumulation, London manipulation, SMT, as you can see here, at the previous day low, and that's part of market open. So we are looking for a bullish buying opportunity. So we're looking to sell, or we're looking to buy the stops. So 9:30 opens, and actually, technically immediately here. Yeah, let me go back a bit. If we're in live time here, we would have seen, obviously more than likely would not got a fill like that, but it would have more than likely been a little bit more up here, but we would have seen 9:30, 9 o'clock opening, accumulation, 9:30 opening, manipulates down, forms SMT, as you can see on all my screens, forms SMT at that 9 a.m. low. YM is the only one that takes that low. ES and NQ do not. That's a divergence in the market. That's our confirmation. Back to the scalping part of this lesson. More than likely, you would have trimmed at the accumulation high. So you would have trimmed back here. If you moved your stop loss break even, you would have been caught break even. So I still want to, kind of refresh what's realistic. More than likely, like I just said, you would have trimmed here, been stopped break even following that. Then obviously, like I was talking about, our ultimate drawn liquidity is EQ of this unbalanced range. And this is how you're going to be able to catch the bottom of these moves. Obviously, right off the bat, this isn't something I'm doing right now. I'm targeting, often a low-hanging fruit, but a few years down the line, you'll be taking trades like this. if you really choose to master it, where you're entering where you should be, only waiting until a clear giant liquidity is hit to take profit. Okay, so back here. Right here, we really do not have a clear bias. Price overall, as of now, is bearish. It is the first day of the week. Price overall is bearish. In reference to our daily power 3, we see Asian accumulation. Not really a ton of manipulation. However, if we zoom out, right at 9:30, we form SMT at these highs. But now going into 9:30, we have yet to see the SMT. We're looking at lower time frame structure. We see from 8:40 up to 9:30, price has accumulated. So what we're looking for is price to open, form SMT at one of these highs. So if we mark out this, we're looking for price on one of the indices to manipulate above or below and form SMT. So, if we get that out of the way, looking at the other indices here. Trying to spot if there's SMT at these highs. So if you're looking to short here, if you're simply trading AMD pattern, this could be an entry. If you're following this lesson, or you're following SMT, there's no SMT at this high, at the accumulation highs. But we have until 9:40. But let's look at what price just did. Price just formed SMT. So price is failing to form SMT at the accumulation highs. We formed SMT at now these woman highs. That is a potential turtle soup entry model there. This would have been very fast. Not many would take this right off the bat, especially with no experience. So this is again where data collection comes in, months and months of data collection. We'd be targeting external liquidity here. That would be a valid place to trim. For targeting a reasonable level of sell side or buy side, we have our daily high, and then we have our previous day high. For a 30-minute power 3, do we think price is going to expand to 130 points the first 30 minutes market open on the Monday? More than likely not. So we will be targeting this high or stop loss break even. We would have been stopped to break even there. But we should see how price plays out. So TP2, so if we did more stop loss break even, our TP2 would have been hit. So now we went through Sunday and Monday, both had successful trades. Now we're going to Tuesday. I don't care if you think it's hindsight or not, of course it is. Nonetheless, we're showing you what you want to look for in your back testing, in your forward testing. This is what you want to look for. So what we see here is, again, we're still accumulating just like the previous day, but so we'll play off of current market structure. So we have buy side, we put in equal highs. We saw price Asian accumulation. We saw London manipulate, or quote unquote manipulate, but we failed to form any sort of SMT at the previous day low. So potentially what we could be looking for is market to open, to manipulate up, form SMT, come back down and take these lows. Because there's no SMT at the lows, and if there's SMT at the highs, we can look too short. So essentially, if we have a bearish bias, we are looking to sell the stops. Or I keep mixing up. We're looking to sell the limits. We're looking to sell at old highs with SMT. So 9:30 opening. As of now, no SMT. No SMT at these highs. Price displaces up on the next candle. We do actually form SMT there. So if we're making quick decisions, look to short off of that. So in terms of stop loss, we generally are looking at for me personally, I usually have a 15 to 20 point stop loss. If I'm trading micros, I am going to have a 20-25 point stop loss, generally around that. Obviously, showing this example, I'm not in with micros, but yeah, we'll have a strict 20 point stop loss. Risk to reward here seems fine. If we're targeting, if we're targeting the accumulation low, that's 40 points. So we look to trim there, potentially target external liquidity, these equal lows. So would have been stopped there if we had a strict 20 point stop loss. Though, let's look. Do we form new SMT? Yes. If we look over here on YM, on this candle right here, we form new SMT. So, not going to change the sizing. Keep the risk the exact same. 20 point stop loss. TPs remain the same. So we would have, my bad. Yeah, actually that's perfect retracement. Trim there, make up for previous loss at the accumulation lows. Target opposing liquidity. We have our data low. There's no SMT, so there's no SMT down here, I meant, but yeah, that's essentially what it would look like. So the way my rules go in terms of each day, I usually take 1 to 2 trades. If I take a loss, because my risk reward offers for this, if I take a loss, I will still look for another opportunity. One loss doesn't mean I'm done for the day. It just means that I got, usually most of my analysis, I don't want to say all the time, but 80-90% of the time is correct. So often my analysis isn't wrong, but it's often just my entry was not at the best point, so simply look to enter. If I took a second loss, done for the day, closing charts. This trade did not see that. So Sunday, Monday, Tuesday complete, on to Wednesday, the day we sold off 600 points. Now we're going to see, was there an opportunity using this entry model to take advantage of that? Alright, so 9:30 opening here. As of now, market structure is super bearish. Do we have a clear John liquidity lower? Looking at the 15-minute. Sure, if you understand that we're in a market maker sell model, we see sell side being built up on the buy side of the curve. So we can say here is a clear John liquidity. at 211, 210. So we were looking to buy old highs with SMT. 930 opening. Actually, let me look there. Okay, so if you're trading this pattern, this is where we have to question something. Are we willing to, because right now there's SMT, these 1 minute highs. We have SMT at the accumulation low. Technically we have SMT right here, here to here. Are we willing to play against our John liquidity? No. So we're either going to wait for an opportunity to sell at an old high, or we're going to risk playing against our ultimate John liquidity. So for the sake of the video, I'm going to show you guys what that would look like playing against our John liquidity. Maybe if it's against our John liquidity, maybe we enter with half size. The idea here would be target this high, the first high of the accumulation, or up here, or sell off of the SMT. So something I want to know here is right away on this expansion move after our entry with the SMT, we formed, if you look over here on ES, we formed SMT at 1, this high, and 2, the ultimate accumulation high, up here. So either we sell here, be done for the day, potentially look for another trade, but often after a big win, we're done for the day, or we sell there, flip short, or we just wait entirely to the short after that SMT. So let's go into a perfect world where you're making a super quick decision. We enter off that SMT, sell off that SMT, or re-enter short off that SMT, and play the move to the downside. Like I said, John liquidity being 210/211, hit there. But again, that long was just for the sake of the video. Because the John liquidity is lower, we're looking to play in line with that. We're not looking to play against our John liquidity. That comes first. So again, entering off of the indice that did not take the high, we can have a super tight stop loss being this high. If we look here on ES takes a high, NQ does not. So tight stop loss. If we would have, if price went higher, we got stopped. Could have looked to re-enter off of whatever structure formed. So depending on your experience level, that could have been a loss, could have been a win, could have won both sides. So Friday, Monday, Tuesday, and Wednesday complete. Now moving into Thursday, yesterday. Now, as talked about earlier, catching the start. So if we can anticipate a bearish daily power 3, we're going to form a 15-minute entry model. Was there an opportunity yesterday to short before that 15-minute entry model formed? We're about to find out. So prior to market open, price put in equal highs. Not really a ton of clear accumulation. We saw price accumulated, manipulated, but it's not really that clear. Ultimately, if we're judging daily power 3, price accumulated, manipulated, and we could anticipate distribution as, again, we're in a higher time frame market maker sell model. Our John liquidity is the original consolidation low. So ultimately, our John liquidity is lower. for most of this week, we're looking to sell above old highs. So let's see what NQ does at market open. I know many people here would have been looking for a price to take these equal highs, form SMT there, and that's exactly what I would look for if I was entering off this entry model. Looking for SMT at these 1 minute highs. Let's look at YM. So no SMT at these 1 minute highs. So let's keep going. So really no opportunity for Thursday. Potentially could have shorted this high, but there was no SMT there to validate that. So Thursday, no opportunity for the entry model. We just avoid it. Once we hit 940, just step away for the next 20 minutes, come back at 10 a.m. trade the 4-hour power 3. As those who know, I did not short before 10 a.m. today. Mainly because I just was not looking for anything just yet. So far we've seen, similar to the previous day, prior to market open, we formed equal highs. So we have our accumulation. Technically, you could consider this manipulation. You know, if you're focused on that 920 to 940 macro, technically you could sell beneath here. But again, this video is focused on the 30-minute power 3. So 930, this place is down. What is significant about this? We do form SMT. So if you look over at ES and YM, but at this time there's not really any clear structure to play out, enter off of, so personally I would more than likely avoid that. And I would look for an entry up until 940. Alright, so 940 hits. 940 hits right here. Price takes these equal highs. This is the last minute to enter. And we form SMT at those highs. Obviously, this is a bit hindsight, but this is what we would have looked to take within this 30-minute power 3, the 920 to 940 macro. Within this time, we would have looked to short above this old high, above these two old equal highs. SMT is our confirmation. And again, back to our John liquidity. We're currently in a market maker style model. For those watching this video in the future, we have yet to take the initial consolidation low. So John liquidity remains lower. And so enter, caught it nearly perfectly. Probably would have trimmed the contract somewhere around there. Stop loss break even. And now this is actually where I shorted today. I actually shorted right on this candle, playing continuation of that on our next 30-minute power 3. But essentially, that's just kind of a glimpse of how the 9:30 to 10 o'clock 30-minute power 3 is, how we're going to be able to, you know, catch these bottom ticks, these top ticks. And without saying anything else, this is going to take a lot of data collection at a minimum over the next, until the end of summer. Realistically, you guys should be collecting data on demo until the end of the summer on this entry model. Do not rush into live funds. Do not rush into trading max leverage on this. Start low, start on demo. If you're confident enough to enter on live, do that with very small size. Again, like we talked about earlier, this is a very powerful entry model. It can move very fast. very quickly. It can move a lot very fast. We can see 100-point moves in 10 minutes. So, you have to set your stops. You have to be disciplined. Allow yourself to take 2 attempts. 2 attempts for this entry model. Take a loss on both times. Close charts for the day. But that is the end of the lesson. I'll be answering questions now.